Hey everyone, welcome to the latest edition of the market update. Here looking at October 2025. Let's jump right in. We got some interesting stuff to look at. First, we'll touch on new listings and closed sales. Keep in mind, we're looking at the 5 county area, which includes Wake, Durham, Johnston, Orange, and Chatham counties. We're continuing the trend with new listings going up 14.7%. Year to date, we're up just under 14%. In terms of new listings hitting the market throughout the year. That's an interesting trend we'll continue to look at because when we look at closed sales for October of this year compared to October of last year, closed sales were up just 1.5%. So while that's not a huge number, keep in mind that in the past couple of years, we've seen closed sales dropping. So to see that trend reverse this year is a good sign. And even though the year-over-year numbers in October were a little less of an increase than they were in September, that's okay. We'll take it. Year-to-date, closed sales are up 2.5%. So again, moving in the right direction for the first time in a couple of years. But one thing I want to highlight here is this difference between new listings coming on the market year-to-date versus closed sales that are happening. This is why so many agents are seeing listings maybe that they're having to take off the market for the first time in their career. It's because we have more listings coming on. They aren't moving quite as quickly, but again, things are moving in the right direction. So I want to keep focused on what the trends are doing. And so to see closed sales up 2.5% year to date is a really great thing. In fact, I'll show you on one of our charts later. We actually didn't surpass 2024 closed sales year to date until July. So the fact that we went from being having fewer closed sales in 2025 compared to last year to surpassing it in July and now up 2.5%. I expect that year to date number will end the year even higher than this, maybe more in the 3% range. Median sale price was actually flat year over year, 450,000, and year to date up just 0.7% at 453. So I'd say anything under 1% is, for all intents and purposes, really a flat number. As I've been mentioning for a couple of years now, that's really what we want to see. We don't want to see prices fall off dramatically. Having it be a flat trend line will be okay as prices catch up to where they should be. Now, it's not unrealistic that as we look at 2026 that we could see home prices fall a little bit in the 1% to 2% range. But I also wouldn't be surprised if they went up in the 1% to 2% range. Yet to be determined exactly what this delta between new listings continuing to hit the market and closed sales is going to be. So we'll continue to monitor that, of course, as we go. But all in all, I'd say these are really good indications here. New listings going up, which we need, closed sales continuing to go up, and prices staying flat. Those are some good metrics for us for a healthy market going into 2026. Percent of sales price to list price, 98.3. So again, just know we have some negotiating room out there in general. That 98%, for the majority of my career in real estate for the last 20 years, that was actually a pretty common and typical number. If you exclude out the COVID market where it was well over 100%, 98% is a pretty typical number, pretty healthy indication of negotiating room. Another good indication we have of what 2026 may bring, hopefully this trend will continue, but total showings were up 8% year over year. Again, last month they were up 6.7%. October, they're up 8% over October of last year. And of course, showings are an indication of future activity. So if showings are going up, that's great. That's makes sense if we have new listings, more new listings coming on. There are more properties for people to go out and see. So if showing activity goes up, that's a good indication that a good leading indicator that closed transactions will follow. Inventory up almost 32%. October of last year, just as a whole number comparison, was just over 5,900 homes were on the market, and this year just over 7,800. So pretty significant difference there. But again, 7,800 is not out of whack. In fact, it's still lower than we need to be for inventory in our market. And then month supply of inventory, 3.4 months compared to 2.6 months last year. Makes sense that would go up as inventory is going up, or new listings are going up and outpacing the increase of closings that are happening. So that means there are leftover houses sitting on the market because they haven't sold at the same rate that they're coming onto the market. So we do expect inventory to climb a little bit, but 3.4 months, still a really healthy market indicator there. Now, let's take all of this and compare it back to October of 2019. Again, the most recent time period pre-COVID. If this is the first time you're watching one of our market updates, this is a section I really like to see as what does our current market look like compared to the most recent, quote, normal market, pre-COVID market. So inventory back in 2019 was at 8536, again, higher than it is today at just over 7,800. If you were selling real estate in October 2019, you will remember it felt like we had no inventory. So this 8,500 was low for that time period. So certainly 7,800 is still low right now. Plenty of runway to go where we can increase our inventory and not be at risk at all of having an imbalance of supply and demand. Month supply of inventory back then was 2.9. Median sale price was 295. Now, if we were to take that price and extrapolate it out based on a 5.5% appreciation rate, which would be a healthy appreciation rate in our market where we have much more inbound migration than a lot of markets in the country. If we were to do that and just have straight line appreciation, the median price today would be 406,758. But of course, the median price today is 450. So we still have this roughly $44,000 gap that will take about 2 more years. So if we saw this 0% increase in median sales price, if we saw that same flat pricing for the next 2 years, that would be at about, this number would be at about 450. And now the prices would not feel overinflated the way they still do for a lot of people. So it's starting to get more into balance now, but this is why for the next couple of years, it would be nice to see actually really moderate price growth along with some other economic factors to help improve affordability. But this moderated price growth is actually a really good thing, a healthy thing for our market. That's what we're hoping to continue to see with hopefully not too much of a drop off beyond 1 or 2% price change. So just some perspective there. New listings that came on in October of 2019, just over 3,300. And this month we were just under 3,300. So really not too much of a delta there. So that's a good indication. Year to date, back in 2019, we were at 36.5. This year we're at 33.6. So again, we're short just about 3,000 listings from where we were in 2019. Not a terrible number, just about a 10% difference there. Where we see the big difference, of course, as has been the case all year, is in closed sales. So 2019, there were almost 3,000 closed sales, whereas this year we were at 2,286. So that's roughly, if we look at the year-to-date numbers, we were at 29,503 closed sales year-to-date through October. This year, we're just at 22,852. So that's about a 30% difference. Meaning we need a 30% increase in the number of closed transactions in order to catch up to the pace we were at in 2019. Obviously, we're not going to get there this year, and it's very unlikely we would get there next year. We're going to be looking at 2, 3, 4 years out before we get back to this, most likely. Of course, none of us can predict the future that far out, but we are moving in the right direction. So that's a really good indicator, really good sign as we look at October 2025. All right, let me jump into some charts here just to help give you some visuals. This just shows inventory levels. I like looking at this line chart just to see kind of trends, what we would expect to see now. Of course, this green line here represents 2025, and the orange or yellow line here indicates 2019. So what we would expect to see now is inventory levels starting to fall off through the end of the year and then picking back up going into 2026. We had a really steep run up here in 2025. This is atypical, but this is just an indication of our market that was starved of listings and is trying to get itself back up into a balanced market, which we did as we got into the summertime. We saw it flatten out, which is common, and now we'll see inventory levels coming down. So nothing out of the ordinary here. We'll just continue to see this, and hopefully at some point we'll see this green line surpass this gold line here, showing that we are supplying our market with sufficient inventory to match what looks to be an increasing demand side. Let's jump right in here to new listings. This is a cumulative look. So this is year-to-date numbers in each of these month categories. The percentage, if you're looking on your computer, you can see this. It might be difficult on your phone, but the percentage over each of these lines here, so the green bar represents 2025. That represents what percentage increase we would need in new listings to catch up to the 2019 number, which is this gold bar. So we started the year needing an 11.5% increase in new listings to catch up to 2019. And we're now at 8.6 as we sit here in October. Again, we're not going to catch up to 2019 this year, but actually the trajectory that we've been on for the last couple of years of new listing increases, it is very possible that we could catch up with 2019 numbers in terms of new listings hitting the market in 2026. So that's not a prediction, but if we're looking at the trends from the last couple of years, if that continues, we should be back in line with where we were in 2019. So from a supply side, much more healthy. We actually still need to see that go up beyond the 2019 numbers. Of course, we have a larger population here today than we did 6 years ago. So having more listings even than we had in 2019 would actually be a good thing. So hopefully, as I'm showing you this chart next year, we'll actually see 2026 numbers surpassing 2025 and 2019 numbers. So just a visual there for you. Let's look at closed sales. This, of course, is the most jarring. This is just a monthly data set here, not cumulative for the year. The thing to point out, again, if this is your first time watching us this year, is that we were actually behind the 8 ball. So the green bar was lower than the blue bar. Blue bar represents last year. We were lower in terms of closed sales each month until May. May was the first month where we actually beat out the 2024 numbers, save for January. But February, March, April, we were below the 2024 numbers. Finally surpassed that in May. And what you'll see on the next chart is that July is when we finally year to date passed the 2024 numbers. And we've continued that trajectory. The only thing to point out here, nothing really significant here other than we see a much smaller delta right here between the October sales in 2024 and 2025. This could be that last year there was an abnormal lift in number of closed transactions because as interest rates started to come down in August, leading up to the September Fed meeting where it was anticipated they were going to cut rates, there could have been more transactions going pending as that was happening, led to more closings in October. But that was just kind of maybe an inflated closed sales number last year due to that. This year, we didn't see that same run up. Even though we had the same experience with interest rates coming down leading up to the Fed meeting, the market kind of understood what was happening, and we didn't see the frenzy of people trying to get under contract there. So that might explain a little bit of why the delta is a little bit different, but still really good numbers. If we look at year-to-date numbers, the thing to keep in mind here is where we sit today. Again, this is what I was talking about just a minute ago, July. If you look in June here, green bar still below the blue bar. But then in July, we surpassed it on a year-to-date basis and have not looked back since. But if you see the percentages here, again, this means we need a 29.7% increase in the number of closed sales to catch up to where we were in 2019. Not going to happen this year. Not going to happen next year. Might be looking at 2027 or beyond to really start to catch up to that demand side and getting the closings that we need. But we are moving in the right direction. And that is a really positive outlook as I look at 2026 and what agents should be expecting, and even consumers to have a balanced market out there if you're a buyer or seller. Of course, sellers are wishing the prices maybe are where they were 3 years ago. But nevertheless, there's still healthy demand for listings. The homes that are prepared correctly and priced correctly are still going to move quickly. Buyers can find fair deals out there. So it's looking at like a really healthy market for 2026. A couple more things to just point out and we'll wrap it up. This is the new listings to closings ratio. Again, if this is your first time, this really indicates how painful does it feel for sellers out in the market. And this 1.47 means basically that you have to take 6 listings in order to sell 4. So for every 6 listings that go on the market, only 4 are going to sell. That means 2 are having to come off the market, re-strategize on pricing. Those listings will likely come back on at a later time. But you have to take 6 listings to sell 4. Last year, you had to take 5 listings to sell 4. 2023, you had to take 6 listings to sell 5. Okay, or 5 listings to sell 4. and if you go back to the COVID period, you took one listing and sold one listing. So this isn't an indication of the health of a market or what buyers feel like. This really is just an indication of how painful is it for sellers. And so it's a little more painful than it's been in years past. You have to go back to the end of the Great Recession in order to see a number that's kind of like this. So that's why agents are experiencing listings coming off the market for the first time in their career, why sellers are getting frustrated when the home hasn't sold in 30, 60, 90 days. They're not accustomed to that because these are the numbers that we're coming out of, although this number is not out of whack in terms of what would be kind of a healthy experience for a seller. So just a little perspective there, maybe share with sellers so they kind of have an understanding. And then we look at housing affordability. Not a lot new here, but I do just want to point out a couple of things. We're at 76 in October. That's only a 1.3% increase in affordability from last year. So needle's not moving there. But if we look back to October of 2023, where affordability was at 68, that's over a 10% increase in affordability here as we sit in October of 2025. So no really amazing trend lines here moving us in the right direction. But if we keep prices flat or even minor price drops or minor price gains in the coming years, as well as healthy wage growth and hopefully more moderation on inflation, we should be poised to see this number gradually start to improve. And again, that's what we want. We don't want run-ups like we saw in COVID. We don't want drop-offs like we saw during the great financial crisis. We want healthy moves in the right direction. And I would say all of the data that we're looking at here in October of 2025 is pointing towards a healthy trajectory in the right direction as we approach 2026. So I'm optimistic as we look over what the next 12, 24 months will likely bring, barring any major outside economic factors that put things in the other direction. So all in all, I'm optimistic and have a smile on my face as I look ahead. Hopefully you are as well. And hopefully this information has been helpful for you to understand the local market here in the Triangle. Until next time, take care.